It's time now for top picks here on Market Call with Ross Healy. Top pick number one, a longtime favorite, I think, of BNN Bloomberg viewers. Certainly lots of questions over the years on this one. Crescent Point Energy, ticker symbol CPG on the TSX.
Okay, Paul, I'm going to start my remarks by saying when I went to choose my three stocks today, knowing what kind of a market that I was in, my aim and object was to create a portfolio that, even if it didn't work out in the short or even in the intermediate term, was not going to destroy you. So I wasn't going to buy stocks that were halfway fallen growth stocks and hope for the best. So they're all cheap. So Crescent Point Energy, 4.5 times earnings and 1 times its book value. What's not to like? I like the oils now, and I expect that the cheap oils should do quite well. So I'm looking forward to greater things from Crescent Point.
Okay, you spoke highly of a gold stock earlier in the program. Here's another one, regarded by many as the flagship Canadian producer, Agnico Eagle Mines, AEM on the TSX.
Yes, I like it, Agnico Eagle, and they made a very, I think, clever acquisition in buying Kirkland Lake. They have money. Kirkland Lake has lots of property. It's a it's marriage made in heaven, and I think that should do well as a business. But also, I think in the market, particularly as I expect, we do get a move upwards in the price of gold and silver.
Okay, and we've tackled a couple of banks, I think 3 of the major banks through the course of the program, thanks to our viewers who wrote or called in questions. Let's go to one of the smaller Canadian banks, still a high-profile stock, Canadian Western Bank, ticker symbol CWB.
Yeah, this, you know, I was looking through my stocks the other day, and Canadian Western Bank didn't show up, and then we had a week or so of weak action, and wham, down the stock came to a very attractive level. This is a cheap bank in an area of Canada which I think has got to be enjoying some kind of a renaissance due to the energy business, if not now, whenever. And if you don't buy these stocks when they're trading at book or a discount to book, and at a very low PE ratio, which I think is less than 7.5 times, this, by the way, is as cheap as Canadian Western Bank has been in the 26 years for which I have data, except for the COVID low, which was a panic. And of course, remember, oil went to minus $26 or something like that. So the whole oil patch was going to vanish. Of course it went. But that isn't going to happen now. I think CWB should be getting its feet underneath it and doing well, and a nice dividend as well.
The price earnings multiple, you're correct, is under 7.5 times. It's 7.3 times on a forward-looking, 7.5 times, I should say, on a forward-looking basis. What about, though, Ross, the apprehensions about a recession here in Canada? That is not a good environment for banks. Is this the right time to make a purchase of a Canadian banking stock?
Well, I think you can play that one as you like. My long experience with our banks coming through recessions, not U.S. banks, but our banks coming through recessions, is that they typically come through them as if they didn't actually occur. They didn't appear. It's amazing. You look at their earnings trends. The only thing that happens in bear markets is that the stocks bounce up and down and give you great opportunities to buy them. But outside of that, from a fundamental point of view, virtually nothing happens. We are well regulated, well run, and if you can buy these things at a good discount to their typical valuation levels, then you should buy them, because they will stand you in good stead and give you good income as well.